Welcome everyone to today's live stream and webinar here with PrimeXBT, as we have some very serious developments in the Middle East, as I'm sure a lot of you are already aware of. So what we're going to do here today is we're going to go through the markets, the global markets, to see what effects we are seeing in the price today, and talk a little bit about what effects this might have on the future projection in the coming days, weeks, and potentially even months. All right, welcome everyone. Hope you guys are doing good. Let me know if you can hear me, and let me know if you can see me. We're starting a minute early here. Get everyone coming in here and to get everything set up. Hope you're all doing great. Last live stream we did, I believe that was on Thursday. We had a lot of good comments, a lot of good questions, and very high engagement. And I would love to, or actually I would ask you all to keep up with the engagement in the chat, and give me all of those good questions that you had yesterday, because I've been getting a lot of good feedback from a lot of you listeners and viewers of the show here, that the questions that you asked in the chat also helped a lot of people better understand some of the concepts that we've talked about here today. So very happy to get all your questions in here. Now, for those of you just joining here, we are going to be covering the situation that we got currently in the Middle East. As you guys know, over the weekend on the 20... when was it? I believe it was Saturday, 28th. We had a joint military action by the US and Israel, an attack on Iran, which caused, as you can see here on the chart, it caused Bitcoin to go down and test the lower support levels, which would be, in this case, the 60K support region. But then it got quickly bought up again. And now the situation in the Middle East is deteriorating and it's escalating. We now have gone from initially to 3 countries being involved in this conflict, and we're now seeing reports of up to as many as 11 countries are now involved in this conflict. And it looks to be more than just a local conflict. It looks to be more of a broader regional conflict. And now this, of course, can have and is having severe consequences to the markets, especially heightened volatility. Now, in times of uncertainty, like what we're seeing right now, in times of especially geopolitical uncertainty, we are seeing moves on gold, right? You can go to the gold chart here and I'll show what I mean. So on the, and we saw before the attack on Iran, the attack on Iran happened on the 28th. So after the close of this candle right here. And we saw even before this, we saw gold breaking out, okay? So the market was on edge. People kind of expected something to happen, right? And then we had that escalation and the attack, and obviously gold had a strong move to the upside, and we're not testing that immediate resistance zone, trading at exactly 5,400 at the time of this live stream, and we got the 5,600 resistance level right above. This is a typical safe haven risk of geopolitical tension driven move. As you guys know, in times of uncertainty, investors, they tend to flee to safe haven assets like gold. And the reason for this is quite simple. Investors, and traders, well, traders are trading volatility, right? But if you're looking at investors, they want safety, they want stability. In stable market conditions, markets tend to slowly but surely rise. But then in times of uncertainty, you're getting spikes like what we're getting right now. And this is a typical risk-off move, which means in times of uncertainty, people want to take some risk off the table. That's why we call it risk-off. It's like you have that switch. You're turning like a light switch. Risk on, risk off, risk on, risk off. And we are right now in a risk-off environment, which means that risk assets like crypto and stocks will be falling, and safe haven assets like gold will be rising. And there's another very important aspect to this whole situation, and that is the energy market, and especially with oil. Now, let me go over to the oil market. As you can see right here, this would be Brent crude oil. And like we saw here, is a massive, massive move to the upside. The weekend gap here is huge. We're talking, let's see where the weekend gap was actually, where did it open? Well, here. So on this market, it's a massive gap to the upside of over, I believe it was close to 10%. And the reason for this is because Iran is controlling a pathway called the Strait of Hormuz, or I'm not sure I pronounced that correctly, but a very big part of the transportation of crude oil goes through that region, and it has now been closed, which of course, by the whole idea of the law of supply and demand, if you have high demand, but you're getting lower supply, prices go up, right? And this is the biggest impact currently on this situation. That is the oil markets. And I'm also seeing reports right now coming out that European gas prices are surging after Qatari LNG production is halting, and they're citing a potential for force majeure situation. So they're halting LNG production, which is obviously having a effect on gas prices. So we saw that natural gas did rise previously from January of this year up to a high in the end of January. Massive move to the upside of over 80%. And we're now seeing that starting to rise higher as well. So the energy markets are in focus right now. And we can, of course, trade natural gas, and Brent crude oil right on the PrimeXBT platform. And it's scenarios like these where we thrive as traders. This is where money is made, but also where money is lost. So we have to calculate our position sizes and our risk management accordingly. But it's in volatile markets where we can trade. If there's no volatility, there's no trading. So to sum it all up, we got gold being affected because it's a safe haven assets, and people are fleeing to safe haven assets like gold in times of uncertainty. And that's exactly what we're seeing right now. And because of the situation with supply limitations in oil production or oil transportation, we're seeing the price of oil rising heavily. And if we look at the equity market, equities being the stock market, we can look at the two major equities two major equity indices that is very important to watch when you're tracking the overall sentiment in the market. In the stock market, we got the NASDAQ and we have the S&P 500. NASDAQ obviously being the tech-heavy index, the US 100, and the S&P 500 being the top 500 companies in the US. We also have the US Secretary of War, Hegseth, is going to be speaking right now, I believe. So he's speaking currently right now at the White House. So we might see some potential market movements based on his commentary as well. So traders and investors will be watching that speech for potential reactions. Now, this is what we got right now. If we look at the S&P 500, we have a gap to the downside, but this is a level that we have been trading in this area for many times, right? This is not the first time testing this level as support. Looking at NASDAQ, we are not even coming down to the important support that we hit in the beginning of last month. So overall, looking at the US indices and equity market, we're not really seeing any massive moves to the downside, although the gaps were quite big and the moves are continuing to the downside. It's nothing catastrophic, right? Now, what's interesting as well is looking at the Nikkei, the Japanese stock index, the Nikkei 225, this one right here. Now, this is interesting because we've done some extensive analysis on this, and if you're interested in getting daily technical analysis articles from our team at PrimeXBT, go check out the market research blog that we have on the website. Highly recommend you go do that right now, and make sure you check the discovery tab on our platform where you can get the real-time updates on the markets as well. Now, looking at the Nikkei, this is a really, in my opinion, a really good dip to the downside. Now, we're looking at the Nikkei as being one of the strongest equities index over the past couple of months. I mean, you can just look at the trend of the Nikkei and you can compare it with the likes of the S&P 500. So this is the Nikkei. We've been in a strong bull market since April of this year. Going back to the S&P 500, we see that this US stock market has been in somewhat of a bull market since April, but we're getting into a more of a tightening potential consolidation range right here. If the current situation in Japan is going to continue in this manner, Nikkei might be a good opportunity for myself, at least, to fill up on some positions. I've been waiting to get in on this trade right here, and maybe the current risk of sentiment we're seeing right now, maybe it gives us an opportunity to get in. And you might be telling me right now, well, wait a minute, this situation in the Middle East is escalating and becoming worse by the hour. But a lot of people said the same thing about the tariffs in April, right? When we had the April dump, a lot of people said, well, it's over. We're going into recession and we have a completely new regime in the market, and this is the end of the bull market. What happened? Well, we rallied and broke into new all-time highs only about a month or so later. There's a lesson in there. You know the saying, buy when there's what is it? Buy when there's fear. That old saying from, I believe it was Warren Buffett. You want to buy when others are fearful, and you want to be selling when others are euphoric. Now, what we haven't covered here is Bitcoin. Now, what's interesting here is Bitcoin is also a risk asset, right? So when the stock indices are falling, Bitcoin tends to be falling with it. But Bitcoin did something very, very interesting over the weekend. So we had the attack on Iran right here. And what happened with Bitcoin? It recovered. During the whole situation, Bitcoin recovered. And what's important here is it's trading above where the initial move happened. So it's actually very surprising to me that Bitcoin is showing this strength, right? It's showing relative strength right here. Because I would have guessed that Bitcoin would be trading much, much lower. Because Bitcoin has been moving to the downside with equities move down, but it has not been moving to the upside when equities move to the upside. But this might be a sign of there's actually some fundamental relative strength with Bitcoin here. I'm interested to see what the RSI is telling us here on the daily. Would be interesting to see if we could perhaps have a... Let me just change this a little bit. It would be very interesting to see if we could potentially have a bullish divergence on RSI here. So we go into the indicator tab, we type in RSI. And where is it? Well, relative strength index right here. And what do we have on the RSI? Well, I would actually say that this is potentially... It's not technically a bullish divergence because price action is actually giving us higher lows, but it's interesting to see that on the 4-hour, the high end RSI is quite significantly much higher than the previous one, while price is almost at a double bottom. And on the daily, it's significantly higher. So there are some relative strength here in terms of momentum as well, which is very interesting. For Bitcoin going forward, I believe there are two main key levels to be watching, and that is the 60K support below and the 68K resistance above. A break above the 60K, 68K resistance, and I see it as probabilistic to get a move in the direction. So let me be very clear here. Just because we might get a move above 68K does not mean technically that the bear market is over. And let me show you why. I'm just going to add these together. Make sure I got all the correct information on the screen here for you guys. Now, I want to zoom out on Bitcoin because I think it's important to get a overview what's happening right here. Now, this is what I'm looking at for Bitcoin right now. So even if we do get a move above that 68K level, and we're watching the level between 68K and 72K, it might just mean that we activate the secondary trend within the primary trend, which is a downtrend. So according to the Dow theory, we have three types of trends. We have the primary, the secondary, and the intermediate trend. The primary trend is this current downtrend right here, and the secondary trend would be a trend that runs against the primary trend. A break above 68K to 72K might just mean that we activate the secondary trend in an overall primary downtrend, which could mean that we see a relief rally. That activation of the secondary trend might just be a relief rally. But it's still very tradable. Go back to the 4-hour time frame. And we add the levels that we talked about. I'm actually going to take this text and I will add it instead to this. It'll be a little bit easier to navigate the chart and show you all exactly what I mean if I do it like this. So a break above this trend line area and that 68K resistance, let's assume that, just for the sake of this argument, that we get something that might look like this. We get a move about 68K. Maybe we retest this level for a move higher. Well, where is that next level above? If we add the high time frame levels, we see that the 70K resistance is that level right here. And the next major resistance area above comes in starting at around 80 to 81K. And as you can see right here, even though we might be in the bear market and we might be looking at a relief rally to activate that secondary trend, we might still be able to ride this volatility. Now, I'm not saying this will happen, and this is not financial advice, of course. You will have to do your own research, and it's all a game of probabilities, right? This might happen, it might not happen. But if it happens, how do we navigate this market? What I want to say is, from my way of trading, my perspective on the markets, the risk to reward of this move is quite favorable. I'm looking at risk to reward trades of 2 at a minimum, and this gives me 2R up to that 80K region, and as high as above 3R up to that 85. So on average, about 2.5R. This is one trade that I'm potentially looking to take on Bitcoin to the upside. To the downside on Bitcoin, I really want to see the 60K region or the 60K region to fall or to fail for us to potentially go to 52K. That's the idea of trading level to level. So that's on Bitcoin right here. Let me go through some through some questions here before I continue. This is a great question. Does rising geopolitical uncertainty strengthen Bitcoin's digital gold narrative or weaken it? So the digital gold narrative for Bitcoin, as far as we see right now, that argument is pretty much dead. Okay, the Bitcoin is not acting as the digital gold. Gold is acting like the digital gold. So that argument is just not something that we can rely on anymore, because it's quite obvious that it's not acting as a potential hedge against uncertainty. Let's see. Let's see if we can find another question in relationship to Bitcoin here. Let's take this one right here. Should we move the stop loss away or closer for greater protection? Now, I'm always going to be a believer in having wide stop losses. And the reason for this is very simple. I'm trading the primary trend. And if you're going to be trading the primary trend, you have to have wide stop losses, enough of a wide stop loss to be able to absorb the intraday fluctuation. Now, we all trade in different ways. If you're an intraday trader, you're going to have a tighter stop loss, but you'll also be managing that position much more actively. If you're a scalper, you're going to have a very tight stop loss, but you also will exit the trade quicker and manage the position more actively. So there's no right or wrong answer to this. My answer to this would simply be, it depends on your trading style and your strategy. And if you have a trading style and you have a strategy, then you just follow that strategy, follow that style. If you don't have that, then this is something you need to develop. Now, what's good is that we are developing a in-depth trading academy and educational content for our clients at PrimeXBT. So if you don't have a trading strategy today, you will soon have all the tools necessary to create one strategy on your own. All right, let's keep all the questions coming. Great questions. Let's keep it all coming, and we will go through it all. Here's another great question. If Bitcoin breaks and closes above 68K, this is this level right here on the chart, would you expect a strong continuation towards 70 to 85K, or could this be a liquidity grab before another move down? So listen, I don't think in terms of liquidity grab or anything like that, because I believe that using that type of wording is going to set you up for blaming someone else for your trading mistakes. So you could say, for example, oh, I bought this breakout, but it was just a manipulation move. It was a liquidity grab, and then we went down and took out my stop loss. It doesn't matter why something happens. It doesn't matter why something happens. All that matters is how did you perform? How did you perform? What's the P&L end of the day? You can't blame anyone else or anything else than you when it comes to your trading performance. So on the question, do I think that we'll see a strong continuation, or do I expect? I don't expect anything. Okay, I do not expect anything in the markets. All that I expect from trading is that I follow through on the ideas that I have about the most probabilistic outcome of an idea. I see a opportunity to go long on Bitcoin once this level breaks, because I'm a trend following trader. And the reason why I'm looking at this as a possible trend goes back to another question that we just had that I'm going to bring up here. How do we identify a trend change when market change trend? Well, it's very simple. If you have lower highs and lower lows, you're in a downtrend. When you start to see the first higher low or higher high, so we got lower highs right here, and if we see price coming up here and creating a higher high, that's your first sign of a potential shift in trend. And then if you come down in here and you form a, like we just did here, a higher low, then now you have a potential new uptrend forming. And all I care about is, do I see a potential change in the trend? And if I do that, I simply look for the best entry opportunity in that trend. And then I'm going to ride the trend for as long as possible if I'm trading with the primary trend. But here we are trading against the primary trend, and we actually are trading the secondary trend. At that point, I'm setting a take profit target, and I will be riding this secondary trend until we hit a take profit target up here, or I get stopped out. If this is not the beginning of a new trend and the market moves like this, I will be stopped out, and there's nothing more to think about. We move on to the next opportunity. That's all the expectations I have for this move. I'm not expecting price to do anything. All I do is I expect price to show me the signs of a possible move, and then I enter, and then I don't really care what direction the market moves in. All I care about is what's my idea, and I follow that idea. Very simple. If you guys start thinking like that, having that trader's mindset where you're thinking probabilistic, you think in probabilities and not certainty. You're thinking probabilities and not have a outcome-oriented mindset, but instead you think that A has happened, therefore I'm doing B, and that's it. You don't really have to think longer than that. All right. So that's a possible upside target for Bitcoin. Now, what I'm most interested in when it comes to Bitcoin, let me change the naming of this. Key levels 4 hour setup. Now, what I'm actually more interested in Bitcoin is to potentially look at a short entry up in this region, right? If we get to that region, I don't really have much of a choice than to go short here, because that would be trading with the primary trend. Not only is it trading with the primary trend, it's also a perfect confluence area with the Fibonacci retracement level as well. I might be wrong, and I might lose money on that one, but I will happily be wrong on this trade, because that then means that Bitcoin might potentially be back in a bull market, which I highly doubt, because I feel like we're just halfway through the bear market. Remember, the max drawdown of the current bear market is like 55% or something. Bear market's bottom on Bitcoin doesn't come in after at least 75% most likely. So that's Bitcoin. Now let's move on. We've talked about Bitcoin for long enough. Let's see if we got anything else to cover here. Good question. How can we identify key reversal zones so that we can enter the trade early before the market reverses? Now, I don't think so. Entering the market early is a lot of times most likely going to be giving you a lower win rate, because no one knows where the market is going. No one can predict where the market is going. No one can predict what happens in the next week or the next month. Like it's just impossible, right? So there's only really one simple way of trading, and that is going with the trend. Okay, now this can be applied on lower time frames as well. You can see signs of a downtrend hitting a support, and then you zoom in. Let's say you get a downtrend on the daily, it hits a support level. You zoom in today 1 hour, and you're getting a break on structure and a potential uptrend. That's applying that same method of following the trend, but you're doing so on the lower time frames. Following the trends is always going to be so much easier than trying to predict where the next trend will be. It's just better to wait and say, okay, we now have a trend, so I'm going to follow that trend, instead of saying, when is the next trend going to appear? That's very, very difficult. Right now, Bitcoin is in a downtrend. So what do we do in a downtrend? Well, it pains me to say this, but we go short, right? As much as I love Bitcoin, I don't believe this to be the bottom, but I'm happily to be proven otherwise. And my opinions of this being the bottom or not doesn't matter. All that matters is price, because price never lies. All right, let's move on. Another question: if the trend is upward or downward, is it necessary to consider reducing the stop loss? It doesn't matter if the trend is upwards or downwards. It depends. Like, I guess it depends on your position, where you're positioned right now. All right, let's move on. Let's look at. We're going to be looking at gold. Okay, I know a lot of you have been talking about gold, asking questions about gold, and of course, we're going to update you all on gold. You know what? I'm going to be sitting for this one. This is so important that I feel like I need to be sitting, because when I pull up the gold chart, I feel like passing out. There we go. I'm now seated. I've hit my support. Oh, there's a lot of levels on here, a lot of text. Should we perhaps adjust this as well? add the text in here. Otherwise, it's going to be very... Otherwise, it's going to be a very messy chart. So we got price right now testing that immediate support, which sits around 5,400. And then the immediate support, now that's the immediate resistance at 5,400, sorry. And then we have the immediate support below at around 5,250. So as you can see right here, we had a strong gap up on gold this morning, or not this morning, but I guess depends on where you are. But on the market open, we had a strong gap to the upside, reaching that immediate resistance at 5,400. Can we continue higher? Well, we can always continue higher, but we can always continue reverse. Do I see any signs of reversals? Not really. I do have, of course, we do see the first candle right here. Looks like a potential doji type of candle, dragonfly, doji perhaps. It's a candlestick pattern that tells us that there is sellers outpacing buyers here at a place of resistance. And we do have equal tops here with a slight lower height right here. So yes, I would say that gold is looks like it could potentially be topping out here, but you also see that we've hit resistance here, came down, and then has strong bullish reaction right here. If we lose this level on the lower time frames, now we're looking at the 15-minute here, right? So on the lower time frames, if gold would break below this level, now this would be low time frame support. And if gold breaks below this level, I would say there is a possibility of filling the gap. And we got the gap right here. But more importantly, right below this gap, we have an area called the reload zone, the local reload zone, the RLZ. So this is the reload zone confluent with the 20 EMA on the 4 hour at around 5,250. That is a solid support area if we do break down. Let me add an alert right here to alert myself if that actually happens. Updating myself on the current situation. We have Exet still speaking. Trying to get a sense of if the market is reacting to this in any way. Looking at the 1 minute here. Let's see, let's zoom out to the 5 minute. We have a rather volatile last couple of hours here. Does look like potentially at least the US indices printing a local bottom here. Japanese index, the Nikkei, still looks rather weak. But I'm really liking this for a potential bottom formation, a local bottom. So the answer to this question is simply gaps do not have to be filled. There is no real technical significance to gaps being filled. Gaps do not have to be filled. All right, we got a good question here. For a Forex trader with a small account, what is the safest risk management strategy to achieve consistent growth without blowing the account? So when it comes to trading with a small account, there is always going to be a relationship. It doesn't matter if you have a big or small account. There's always going to be a relationship between risk and reward as a trader and an investor. And the more you risk, the more reward you're getting. There's no such thing as that, there's an equal relationship, a linear relationship between risk and reward. If you're risking a lot, you're gonna have higher rewards. But of course, also with that higher risk, you also run the risk of losing more money. On a smaller account, if you have a very conservative risk approach, your account will not grow very quickly. And the thing with a small account, if you make 1% on $1 million, that's way more money than making 1% on $1,000. So let's say you have a account of $1,000 or $2,000 or something like that, and you're making 1%. You might feel like that's not enough, right? You might want to be making 5%, right? So what do? Well, you increase your position size 5 times to get 5 times more reward. But you're also increasing the chance of a massive loss 5 times. So there are no real safe way of achieving consistent growth without blowing the account with high risk. If you have high risk, there's always going to be the chance of having a major losing streak. So there's only really one way of having long-term consistent growth, and that is making sure that you never risk more than what your trading system can allow for. Now, there's a very simple way of doing this. You need to ask yourself, what is the max drawdown of my trading system? Now, let's say that you're backtesting your system and you're taking trades in this backtest of 1% risk per trade. So every time you hit a loser, you lose 1%, right? Simple. And then according to this backtest, you see that your max losing streak is 10%. So if you're going to be so if you're going to be risking 1% per trade, your max drawdown is 10%. Now, where is your max drawdown limit? You might say that, okay, my absolute max drawdown on this account is 20%. Well, then it's simple. You're going to be risking 2% per trade. If you risk 2% per trade, then your max drawdown becomes 20. And then you know how much you're going to be risking. And then it doesn't really matter what the profit is on that. All you really have to care about is if you have a profitable system, just make sure that you're not losing too much on your account. Because there is always going to be the risk of ruin, right? Where if you lose too much, you're simply not going to be able to get back to break even without having very good trading returns. I mean, if you lose 50% of your account, you have to make you have to double your account to get back to break even, which is not very sustainable. So first, calculate the risk of your trading system, and that dictates the maximum risk that you can take on a small account. It doesn't matter if you have a small account or a big account, it's going to be the same approach. But if you have a small account and you want to grow it quickly, you're going to make sure that, I mean, you have to understand that there is a significant risk of you blowing that account. Well, it depends on, if you're a swing trader, I'd say continue swing trading. If you're a day trader, continue day trading. But I always say that it depends on your personality and your trading style. I would say that if you're a very good day trader, you're always going to be able to make more money than a swing trader. Okay. Because imagine that the swing trader and a day trader have the same trading statistics in terms of average win and average loss. Well, the day trader is always going to be making more money because he's taking more trades. So if you're able to be a good day trader, then day trading these conditions 100% is going to be the better way of doing things, but it's more difficult and you need to know what you're doing. All right, this one. Hi, what do you think about the fact that we're already in the bear market and the Bitcoin is going to drop to 40,000 by August this year? Let's take a look at that. See if I could potentially, like, I'm not really big, like I'm not predicting. I can't really predict anything. 42K support May. Where's August? Yeah, that's very possible. Yeah, definitely very possible. Wouldn't be surprised to see that at all. Yeah, I think in times of uncertainty and times of high volatility, I mean, if you have a trading system specifically designed around high volatility, then you don't really do anything. But if you feel like these current trading conditions are more volatile than what you're used to, and you're feeling a little bit unsecure about your trading style, then yes, reducing your position size, reducing the risk will significantly help you, because it's all about psychology, right? It's all about psychology. And on this question, let's get to this question right here. Psychologically, how do you recover from a loss? And this is a really good question right here. First of all, what I recommend you all to do is to read this book right here. This is a book called Trading in the Zone by Mark Douglas, a absolutely gem of a book. If you haven't read that, you should definitely get it. It will help you figure out how to do exactly this. But from a psychological perspective, if you know your trading system, if you know the statistics of your trading system, and you know the max drawdown and all of that, and you calculate the max drawdown, and you know that you're not risking more than what you should be doing, then getting out from a loss psychologically, it's all about making sure that you follow that system. And when you follow that system, it's going to be so much easier to recover from a drawdown or a loss. Now, the issue is not losing, right? As traders, we have to understand that, like what I've talked about, is it's all about the relationship between risk and reward, right? So as traders, we have to understand that we're never going to win unless we lose. So losing is just part of the game. And a lot of times we're going to be losing more than we win, you know? So what it's all about is the difficult times comes when we make mistakes that we shouldn't be making. That's, at least for me, that's when trading becomes really difficult, because maybe you make a mistake and you write in your trading journal, oh, I did this mistake. Let's make sure I never do this mistake again. And then the week after, maybe even the day after, you make the same mistakes. And that's going to be difficult because that means you're losing trades that you shouldn't be losing because you're taking trades that you shouldn't be taking. So I think it's really, really important to understand how should you be trading and what's your personality and trading style telling you about how you should be trading. And then make sure that you follow that system, you follow the rules of the system. If you do that, it's going to be much, much easier for you to deal with losing trades. All right. Let's take a look at what other markers are we going to... I wanted to show you guys something. We got... I actually have something that I'm really interested in, and I want to show you guys. So I know most of you are trading the crypto markets right here, but I want to show you something very interesting here on EuroCAD. So I've been running this through... If you're not comfortable shorting Bitcoin, then do not short Bitcoin. But sometimes we have to do things we might not be super comfortable in doing in trading. Anyway, EuroCAD here. I want to show you something interesting on EuroCAD. Look at the weekly here. Look at the weekly. We are trading above an area where we have not really been trading above since the financial crisis of the great financial crisis in 2008. It's a long time. It's a very, very long time. It's a strong resistance. We have not created market structure above that level. But what I'm seeing here is a clear cyclical shift. So I have a market regime engine that I use, a quantitative analysis engine that is giving me the it's kind of like a regime filter. It shows me what regime the market is in. Is it bullish, bearish, or neutral? And EuroCAD has recently flipped from neutral to bearish. And we're looking at a move to the downside, which if initiated, I expect this. Now, again, I don't expect anything. But if we do have a downwards trending market and it's a prolonged market, I see it as possible of EuroCAD moving all the way down to 1.5. Now, this is a huge move, and it might take the whole year for this to materialize, but the risk to reward here can be crazy high. Imagine we break down here, might enter a position around this level and trade it all the way down here. This could be a really, really huge trade, and this is something I'm watching in the next couple of days. I would love to see EuroCAD move up here, hit that level, and then fall through, and that would be my my indication of a new trend happening. All right, let's see. We have a long list of questions here. Let's see if we can go through some of them. Let's take this one. What are your major support and resistance zone for the S&P 500? Let's take a look. All right, S&P 500. Where do we have the S&P 500? Right here. Okay. So the major levels here within this range is, I'm currently watching on the daily, on the higher time frames. I'm watching the lower area of this potential range would be around the 6 6,750, and the upper regions or the range EQ would be around 6,870. Okay, so this is the range I believe we're trading within. And if we break below this current support that we're testing, which would be the low of that level would be 6,730-ish, I think there is a fairly high probability of reaching the levels below at 6,530. And everything, what it all comes down to right now is the developments in the Middle East, really. That's what it's all about. If the situation deteriorates, the S&P 500 could likely fall here. Looking at more of an intraday area, it gets more complicated, but I would say on an intraday area, it's still going to be around 6,750, and the highs being around 6,830. Can gold keep rallying? That's a good question. And I would say the very simple answer is yes, it could. We've seen in the past that that gold just keeps running to the upside. It's almost like Bitcoin in that sense. When Bitcoin is in a bull market and you break out, a lot of people are saying, I'm going to wait for Bitcoin to pull back. And then all of a sudden it continues and continues and continues. The same thing for gold. It really likes leaving people behind. And if it's not leaving people behind, it's going to overshoot to the downside. So gold is very volatile, and it's at least in my opinion, it's very difficult to trade on an intraday basis, but on the daily perspective, it becomes very clear and clean, and the trends are very nice here on gold. Can it continue to the upside? Yes, definitely. Will it? I have no idea. But what I can say is that if gold breaks above 5,420 today, I'd say there's a much higher probability of seeing upside, maybe break into new all-time highs, than to see a test of that 5,250 level below. Right, good question. Are there any divergences between price and indicators? Are we looking at? Are we talking about Bitcoin? If we're talking about Bitcoin, we can easily pull that up. Let's take a look. Well, we did have a bullish divergence on the RSI here. I wouldn't really say that we currently have a. I mean, there is some type of divergence here between price and the RSI. MACD, we are seeing equal highs on the MACD histogram, which is not really showing a clear divergence, and then the OBV is still in a very clear downtrend. So I wouldn't really say that there's a strong divergence here with the indicators. Now, what I think is worth watching is the weekly RSI for Bitcoin. Because historically, as you can see here, Bitcoin hit a historic low, has only happened like twice or 3 times in the past. But once we start to see weekly RSI bullish divergence. That usually when a long-term bottom is formed. Now that we can still drop like 40% from current levels, and that would still be something that could play out in the future. But it's definitely something that we should keep our eyes on. A weekly bullish divergence for Bitcoin, I think, would be very interesting. On a daily time frame, I'm not really seeing any very clear divergences on Bitcoin, I'm afraid. Right, let's take another look at oil here. As you can see here, we're breaking above a significant trendline area and coming straight into a significant resistance area right here. And so what we have right now is oil hitting that 80 level, and we have the next high time frame resistance above at 92. If the situation deteriorates in the Middle East and the oil supply is getting tightened, then possibly seeing that next move up to 92 looks like a possible opportunity. All in all, there's a lot of volatility right now in the markets and a lot of interesting opportunities. And don't forget to sign up to PrimeXBT to trade all of these global markets on the same platform. All of the markets that we looked at today, we looked at gold, oil, Bitcoin, Euro, CAD, S&P 400. You can trade all of these markets right on the platform with the same account. And I would highly recommend that you stay extra active in the next couple of days, because this volatility is where we thrive as traders. I would like to thank you all for joining here today as we are coming to the end of this live stream. But that was to give you guys an update on the current markets and the current prices, and show you which of the levels I am watching in the markets and what we might what type of price movements and levels we should be watching in the next couple of days. Don't forget to hit that like and subscribe. And if you're watching this in a replay, make sure to leave a comment if you have any questions. All right. Thanks for watching today, and we will see you all in the next one. Take care and good luck out there.